Hey guys, welcome. I just wanted to take a quick little moment and teach you some candlestick patterns. This is some of the most common candlestick patterns. Some are continuation patterns, some are reversal patterns, and some are breakout patterns. This is based off of technical analysis. So what that means is you're looking at a chart and you say, okay, based off what I can see from this chart, what is my synopsis for what do I expect to happen in the future based off what's happened in the past. So let's go over, I've written down a few candlestick patterns, but let's go over to an actual chart in Option House and look at them together. All right. We are here in Intel Corporation. Mind you, you might also hear a little tot. He's our little guy running around, having fun in the background, doing life. But I wanted to show you falling three pattern. So falling three pattern is this. Let's go over here, make sure I'm not going to select anything. Is this right here. It's got this bigger candle body here, and then it's got two smaller candle bodies, generally rising or going the opposite direction, and then followed by another candle body. And what this is it's a continuation pattern to the downside, hence falling three. And sure enough, what happened? It went all the way down. And then it's kind of consolidating here. So this is a falling three pattern. I also found one over here in Southwest. You can see here, falling three. You've got the big candle body pattern, and then two smaller candle bodies, and then another larger candle body. And sure enough, what happened? Boom! It dropped. How much is that? That's 58 down to 56. It dropped about $1.50 in about 3 days after it presented this falling three candle pattern. But there's also rising three candle patterns, and Johnson & Johnson a little while ago had just a huge upswing. You can see all of these green candle bodies, but in the middle of it is just what seems to be a back-to-back rising three pattern, which is, again, it's a continuation pattern to the upside. And you can see here on this candle body, it's got a large candle body filled with a smaller candle body, and then confirmed by a larger candle body. This right here would be enough to say, hey, this is a continuation pattern of this trend that we've seen. We could expect it to continue to go up. But then what continues to happen? The next days it creates again a rising three with these candle bodies, large candle body, small, small, larger. Just another confirmation that this is a continuation pattern to the upside. Being able to recognize these patterns can drastically increase your potential for gains, but also hedge yourself against losses. There's a few other candle patterns that I wanted to show you. Cat over here has what I would call a rectangle pattern, and this is a pattern where it's consolidated. It has a big move. It's got a big body with some candle wicks on the bottom top, and then it's basically done nothing and just operated inside of this pattern. You do not want to trade this until it breaks out either above up here, or if it breaks out below, and then you can be confident that whatever direction it breaks out of this rectangle, that it's going to continue in that pattern for at least some time after. So this is a rectangle pattern. It's also known as a breakout pattern. You want to wait until you have confirmation of it trading outside of this rectangle. But there's also another breakout pattern that is called a wedge pattern, and it's similar to a rectangle except it creates a wedge. And you can see here there's this big candle body right here. Let's see if I can delete that. There's that big candle body right there, and then what happens? It just kind of consolidates and condenses inside of the range of that big candle body. Again, at this point, this is called a consolidation pattern. You want it to wait till it breaks out, either to the upside or to the downside. In this case, you could say this candle right here was confirmation that it was breaking to the upside. Then what it continued to do, this around $80, and it goes up to as high as around 87, a $7 move over probably about a month's worth of time. But the big thing is that you need confirmation. So you wouldn't trade either to the up or downside in this candlestick pattern until you have confirmation of a breakout, which in this case it came on November 30th. So these are called wedge or rectangle patterns. Those you need confirmation to break out of, also known as breakout patterns. But let's look at another type of pattern called evening star. Evening stars are big bodies that throw a doji, which has a small body but large wicks, and then they reverse. So an evening star is a reversal pattern to the downside. So you can see that it was continuing up. It has this upward trend here, and then it throws this doji, and then as soon as this big red candle body comes in, that confirms this reversal pattern called the evening star, and we can expect this pattern to correct and come down to the downside here. This is on, let's see, July 28th. Go back and check this chart. It's Pepsi, July 28th. See if it did come back and consolidate a little bit and come down here to the downside. So the biggest thing is whenever you have a trend in place, either up or down, you have a large candle body and then a doji with long wicks, be looking out for a reversal pattern to complete either the evening star or its partner, the morning star, which is the exact same thing, just to the upside. And that is over here. You have this downward trend, large red body, doji with long wicks, and that long wick towards the bottom shows that it tried to go down, but it had no more selling pressure. And then what did it do? It reversed and it began going up. And that move right there was 35 to as high as about 36.70. So you could have made a few $100 off of that move just by being able to recognize this chart pattern. So both the morning star and the evening star are reversal patterns. And then another reversal pattern can be what's called a tweezer's top or tweezer bottom. I wasn't able to find a tweezer's bottom, but I was able to find a tweezer's top. That's not right. And here's that tweezer's top. You can see it was down trading around 167. It had this rising 3 pattern to the top, to the upside, and then it hits right around 179 with that long wick at the top of the green body. And then the next, or 2 days later, again a long wick to the top at 179, and then it drops all the way down to as low as 172. So we're talking about a $7 move in the matter of days because you're able to recognize a tweezer's top. And so all this is saying is that these long wicks that both hit the same price point, that's proving some type of resistance, meaning that there's no more buying power beyond that point, and often there's a drawback or a correction, and then there might be a continuation to the upside. And you can do you can find this exact same pattern, which is a reversal pattern, on the flip side, and instead of it going to the top, you would find it somewhere on the bottom, where 2 wicks came close together and then maybe said no more selling power, and then it begins to move to the upside. And so this is also a reversal pattern on technically speaking. And so you can find these patterns all over in multiple different tickers, and they can be indicators for you to give you an insight on what's happening inside that chart and what you can do to position yourself to capture that movement right as it begins, as you have confirmation. So this is a few chart patterns that you can be looking for. There's the falling 3 and the rising 3, both continuation patterns either to the downside or upside. And then there's wedge or rectangle patterns, which are consolidation patterns that you're looking for a breakout, need confirmation on. And then there's both the evening star and the morning star, where it has those large bodies and then it throws a doji with long wicks and then it reverses. Those are reversal patterns. And then tweezer tops and tweezer bottoms are also part of the reversal pattern family. So be looking for these as you're looking at charts and see if you can't pull them out. The best way to find them is to simply look for them. So as you're going through the charts, ask yourself, hey, what pattern is this chart forming? And then wait a few days and see if your synopsis was correct. And then just do that over and over and over. And that's how you begin to recognize these different chart patterns. So I hope this added some value to you. Thanks guys for listening, and till the next time.